The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I'm going to be talking about the U.S. dollar to start off with, but the main thing that I wanted to mention today is the first thing I do when I get up is to check Bloomberg, to see what's happened in the world, to make sure that there's been no devaluations or assassinations or anything else that would affect the market, going really crazy in any direction, whether it's crude oil or whatever it happens to be. And there was really not much on there, and so I switched over to CNBC, and they had a whole special about the new pope. And I switched back to Bloomberg, and there was nothing about the new pope on Bloomberg, zero. Yet CNBC had a big special on it and everything, and I thought that was rather strange, but then I guess that's the way they run their department. So anyway, I thought it was kind of strange. The other thing is when I was on CNBC, which I hardly ever go to that, they had a special guest on today. His name is Walter Piecyk, and he's from BTIG, one of the firms in New York. And that name is very, very familiar to me. I have to tell you the story because this gives everyone hope that's ever been in this business. It was December the 30th, 1999. And I had traded for the Saudi family for about 8 years, and it was the end of the year, and I had shorted Qualcomm at about $602 a share. It had made a 3-drive to a top pattern, and I was, feeling really comfortable, and I sold a couple hundred shares of it. And Walter Piecyk was a 21-year-old or 22-year-old analyst for Thompson McKinnon, and he came out and he said that the price objective for Qualcomm was $1,000 a share. And I didn't know Walter from anyone, and so the stock, was called 150 higher, and so I'm looking at 150 times 200, so I'm looking at roughly $120,000 loss. And so I called my supervisor in New York, and I asked him, I said, look, I got a problem here. And he laughed, and he said, what do you mean a problem? He said, you've had a fantastic year. He said, the stock can go to 1,000, and he still won't affect you very much. And I said, well, that's not the important thing is that I've got to handle this. He says, well, that's your job. He said, don't bother me. And so he hung up, and I said, well, I'm going to wait the first 20 minutes, and if that stock is up more than $100, I'm just going to bite the bullet and just get out of it. Well, the stock opened at $723 to $688. It had a $40 split opening, and it never looked back on the downside. It dropped. That was the high day for Qualcomm, and it went down and down and down. And later on, about 5 or 6 years later, maybe 10 years later, Walter Piecyk was indicted for insider trading, and he spent time in jail, and now he's back, and he was promoting Apple. He gave a buy in Apple today. And, of course, it was a reiteration of his buy at $690 a share. So, nothing really changes in this business. And, God bless him, and I'm glad he's back in the business. I don't know how he's back in the business because usually when you get convicted of a felony, you're barred from the futures industry and the securities industries for life. But evidently, I don't know the whole story. And it was the same person because I did a search. And but he looked older. He was 30-some years older, of course. And let's see, makes him about 50, I guess. But anyway, that was the deja vu that I experienced today. Now, the first chart that I put into the Tiger TV today was the U.S. dollar index. We've been following this, every day this week, and we did hit the objective yesterday on yesterday's show of 83.03, and we hit it again today at 83.07. That completes the head and shoulders pattern that is there. This pattern is totally complete. Remember now, folks, these patterns do have a tendency to fail, but this is at the 786. it's the ABCD pattern that we've been waiting for, and so it's very important that we are watching this with a great deal of intensity. Now, I want to do the euro also so that we can see what's happening with it also, because it is doing the exact same thing that the dollar index is, only reverse, because it is setting at the 786 retracement of the let me get the I did this wrong, 1 second. We were exactly at the 786 retracement last night, and so we have to really be ready to buy the euro on any on any particular dip. If you'll notice in the Tiger TV, you'll see that the cycles that I posted in there are off by about 3 or 4 days. That is not unusual, but the fact that we hit the exact 786 in the euro is very, very important. We're at a major critical point in the U.S. dollar as we speak now, so we must pay very, very close attention to what we have happening here. And this will affect our commodities, because they're a big part of this, because that's what moves this whole economy around the world, are these cash commodities, cash Forex markets, and so we want to keep a really close eye on it. Now, this is the market in the euro for a long-term trade is still quite low. We've had very, very weak, very, very weak since 2008. We've been in a downtrend. We've had lower highs all along, and we completed that ABCD up there around the 137.5 level about 5 weeks ago. And what we're doing now is we're just making the 786 retracement and the ABCD on the dollar index. So this is important for what we're looking at in the dollar index. We're looking for the dollar index to sell off here, and we're looking for the pound, the euro, and the Australian dollar and the Swiss franc to rally against the U.S. dollar, but particularly the euro, because it's 53% of the U.S. dollar. So that's the main thing that we're focusing on when we're looking at this. Now we need to take a look at the gold market here, because we had some really interesting things. I've got to change formats because I switch over to the commodity format when we get to the if this will work. It doesn't work. Hold on just a second. I'm trying to do something new here for TFNN, and that's like trying to train a monkey to wash a coconut. It takes quite a few washings in order to get it right. But on Wednesday's show, we hit the exact 61% retracement on the upside at 15.99, and then we said yesterday, to watch for potential low coming in around the 15.75 level, which is the 61% retracement of the move, and that was the exact low that we hit this morning. And so far we've had a pretty good rally. It's rallied about $1,300. But if the good thing is it's coming out here very, very quickly. And if we can get above the the 15.99 level today, that would really be a positive sign that we're heading way above the 16.20 level. And then the gold and the silver will be on their way, I think, to an upside. We've already seen the gold and silver stocks hold extremely well, and so that's why we want to be able to focus on these markets one at a time, because we don't trade silver very often. The reason for that is that it is not a well, let's put it this way, it's just not as liquid as it is in the gold market. There's not a comparison. The silver market last night went down to the 786 of the low from the end of February, but it also made the 61% retracement of the low that we made back in January. So we had a double confirmation down there. So it's important that silver stays above the the $28.50 per ounce level. On a long-term basis, folks, silver topped at 49 in change, $49 an ounce in change back in April a couple years ago. And it's not like what happened in 1980 when the market went from $54 down to $4. This market has held up extremely well. It gave back quite a bit. Gold did not give up as much. Gold only gave about 30% of its value back, but the silver has held up relatively well during this time. So it doesn't take much for these markets to really get moving in the right direction if that's the case. So we want to watch these markets because I think if you buy the gold on any retracement, I don't like buying it on strength because that's a sure. The only thing you can buy on strength these days is the stock market, and the Dow is up I think 10 days in a row. This will be the 10th day in a row. Go back on your charts and find out how many times that's happened, either up or down. But that's an outlier event. I still believe that what it's just doing here is making a big fake out because the rest of the markets are not performing like the Dow Jones is, but yet that's what they promote. Just like CNBC promotes the Pope and Bloomberg does not promote the Pope. But we'll have to wait and see. I was rather surprised about that because the papal. There's so many Catholics around the world that you'd think that they would have a big special on that, but in fact, they didn't. So we'll have to, I don't think it really means very much on the financial side of it. It's just on the political side why they didn't do that. So I'll get off my soapbox. But anyway, the gold and the silver do look good. The higher bottoms. This is exactly what the Japanese yen was doing when it was trading around the 75 level. It was the same thing that the Nikkei Dow was doing, a couple thousand points ago. So when you see these higher bottoms, that's the definition of an uptrend. If you have higher bottoms, you're in an uptrend. If you have lower tops, you're in a downtrend. It doesn't make any difference, what your definition is. You have to look at the time frame that you're watching, because if you look at the time frame on a 5-minute chart and define a trend, that's different than the trend that you defined on a 60-minute chart or a daily chart. So higher bottoms are uptrends, lower tops are downtrends. That's the main thing, that you want to keep in mind, when you're watching these any market. Doesn't make any difference whether it's the commodity market or the Forex markets or any particular stock, that you have, that you're watching. And since we're talking about stocks, one that I watch occasionally because it's the largest member, one of the larger members of the Dow Jones, and that is this is IBM, and we're making our third drive to a top now, going back to last April, and so there's another reason. Got to take a little break here. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we have a call from Connecticut. Bob, are you there?
Yes, I am, Larry.
What can I do for you, my friend?
I had two questions for you today.
Only two?
Only two.
Okay.
One is in the Qs, QQQ, I see a head and shoulders on the weekly chart.
Yes.
And some Elliott Wave work suggests that there's a downturn, of course. And the second one was a question about the crude oil market.
Okay, the first one, we've been watching this head and shoulders pattern, of course, in the NASDAQ, and it has not violated anything, even with the move that we've had in, the Dow Jones, which is, getting all of the press. So that has held up, extremely well. What I will do is when we come to the break, I will pull up the chart on the chart for the NASDAQ showing the head and shoulders pattern. Now, when we go to crude oil, since we were in the commodity part of the show here, I wanted to, talk about the natural gas contract because, that has been a big one occurring today. We had some news come out. But the main thing that's important here is if you look at what happened last April, when the market was trading at one-half the value that it is now, and it had no believers, and now it's twice as high as it was, and everybody wants it. So this is a perfect example. Is you got to be able to to try to to buy at a time when the market gives you a relatively low risk, and when the markets are up like we have in natural gas and the stock market and stuff like that, these are not low risk times. So I hope the listeners will pay attention to that because that's that's what I'm seeing on a long-term basis in some of these things, but that's the main thing that I want to look at. The crude oil has held the 61% retracement, down at that 90 level. That held, absolutely perfectly. I'll try to post that one in as we're still on the air here. It looks like it wants to go higher. It's made a couple of good tests here to show that it does have a chance to make it. And we made the first objective, at that 90 level. And if you'll get a chance to go into Tiger TV, you'll see that we did hold that $90 a barrel level. We haven't taken out 90. We really need to take out $96 a barrel, Bob, in order to get this thing to move a lot higher in the crude oil. But the good thing is you've got three higher bottoms, and both of them, two of the three were exactly 61% retracements. So that's telling us that we're getting ready to move. This might be some type of relationship to the U.S. dollar, but I'm not sure.
Yeah, one of the things I was kind of scratching my head about with the crude oil is this, a non-technical. There seems to be a lot of supply in the market, and I was wondering if possibly the refiners. There doesn't seem to be a lot of gasoline, so I'm wondering if the refiners might be a play.
I don't follow the refiners, Bob, but that's very good intuitive thinking, because that would be a good answer for it, because gasoline has gone much higher than the crude oil, so that could be a big play. I don't even know one symbol for one refinery stock, so if you get a chance to go in and take a look at them, that might be something that's telling you that it's getting ready to move. The question is, if the refiners are not moving, if they're not going up, with the rest of the market, that would be a really bad sign, because here you have a commodity that they sell that is going up, and they're still not making money. So I think you'd have to pick one or two refiners and take a look at them and see if they are outperforming the market, because my assumption is that they would be a little lagging from what the Dow is doing just by, what's happening with crude oil. But gasoline has been, extremely strong. So they could be very, very strong also. Do you happen to know one refinery stock?
Oh, I haven't looked at it in a few years. I'm thinking maybe Sunoco is still a refiner.
Do you have the symbol for that?
I do not. I'm sorry.
I'll find one, and I'll probably. Oh, we've got someone that's going to. Oh, Valero. That's a good one. I think that's a good. We'll check on Valero, and we'll look at that, and then if after the break, I'll discuss Valero a little bit, and then we'll also discuss, the gasoline, itself, because it has been much stronger, than the crude oil. Of course, we've been watching that for some time now that it's been a lot stronger, but. I have never really thought about that, but that's a really good idea, is to look at the refiners. And that would be something that that we'll be looking at.
Yeah, we're getting killed at the top as consumers. It'd be nice to make a couple of bucks in the trade just to even things out a little.
Okay, I'll take a look at Valero and thank you for calling in, Bob.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we were talking about gasoline futures and how it might relate to the refineries. And I posted into Tiger TV one of them called Valero Energy, and it shows that stock has been outperforming, gasoline futures, and as a matter of fact has reacted quite negatively over the past week or so, and has taken out the lows of last week, which is not a positive sign. So that was really, not the problem that we were looking at. Now, I've also posted into Tiger TV the chart on the Treasury bonds on the weekly basis, because this is what I think is one of the more important charts that we have, because we have broken that 61% retracement at the 142 level that we talked about quite a bit. And the reason why that's important, folks, is this is a weekly chart, and we rallied for 5 weeks to the exact 382 retracement of the high we made last July, and that is a very negative connotation whenever you can only rally that much. The Treasury notes, they were able to rally all the way up to the 61% retracement of that July to January drop, but the bonds were not, and now we've broken down, and we had, of course, last week we had that, really violent, wide-ranging week to the downside, and we've actually continued, down this week. We're due to have some type of a bounce, I would think, shortly, but where that comes, I don't know. All I can say is that this this long-term weekly bond chart is extremely bearish. It looks like interest rates are going to go higher. We've posted the muni bond chart every day that I've been on the air this week, Monday, Wednesday, and Thursday, and that shows all the gap downs and that muni bonds are under a great deal of pressure, to the downside. Also, even more so, than the Treasury bonds. So, there's higher interest rates are on their way. So if you've got a chance to, lock in a mortgage or refinance, and you haven't done it yet, I would think this would be the time, to really take a really hard look at that, because this is what's showing on the interest rates as from what I see on the charts. Now remember, Bernanke has a lot of control of setting interest rates, and he's had interest rates at zero now for 3 years. But that's really that doesn't affect us, folks. We're not entitled to those 0% rates. Those are for the banks and the people that deal with the Fed. So that's the real problem that we have to face. We live in a world where we have to trade what we see, and what we're looking at now is we're looking at higher rates coming in the Treasury bond market. And the question someone asked is, well, can stocks go up, with Treasury bonds rates going up, and of course they can, because they're different markets. The bond market is 6 to 8 times bigger than the stock markets. I'm talking on a global basis. It's just a huge market compared to that. And then when you compare the Forex market to the bond market, the bond market is pretty much insignificant, because the Forex is thousands of times bigger than these markets, and that's why we want to be, watching that particular, move in these things. I wanted to bring up the chart for the notes, just to show you the difference that we had in the retracements, because it was very important that we made the 61% retracement of that last move, and we've broken down now. Badly, and we're still down again this week, but we've had lower highs now since July, which defines a downtrend, and each of the trends that we've had in the both the bonds and the notes have been on the downside, and we're breaking down, and this is not a good sign. So interest rates, at least for the short term here, are going to go higher. How much higher? I don't know. We might pull back, 6 or 8 points, and then, go back to the old highs. All I know is that this major high that we've potentially hit has started to come in and has told us, with these lower highs and these retracements that we've had, is that we are looking, at the higher interest rates and not the lower interest rates. That's the main thing, to keep in mind. Now we have we want to switch over to corn here for a second, because we're in the commodity part here. We've got a big crop report coming in here in the on the 28th of March. That's the really big crop report that we have coming in, and we will be looking to we've already bought some corn down at the 694 level, and it's rallied a little bit, but right now it's just in a holding pattern, and I still think we're going to be able to get corn, down around the 666 level, because that's the long-term 61% retracement in the corn comes in at that 666 level, and that's near the high of the breakout that we had on last year's drought. The one thing that we're really not prepared for this year, folks, is back-to-back droughts. We haven't had anything like that happen since the 1930s, and we weathered through this one okay. Corn went from $5 to almost $9, which is $20,000, which is a bull market in anybody's definition. So if we do get a pullback, we'll be looking for that, and then we will have the first planning intentions report is on March 28th, and that basically, the farmers are going to the banks and finding out, what their financing can be for their seed and their fertilizer and all the other expenses that they have, and then they hedge their crops, against that, because they can lock in a profit most of the time, even before they plant it. And that's what they're trying to do. So The corn is not not quite ready yet, nor is the wheat. So we want to keep a close eye on the corn market because we do have the CORN, which is the ETF for corn, and that is it has enough volume that you can put an order in and get an adequate fill and still be safe as far as being able to put your order in and protect yourself for something that is so you can at least have your risk imported in this thing. So I want to switch over now to another one of the grains, which is the soybean market, and we've hit the 61% retracement in the soybean market down at the 1370 level. We made the large ABCD on the upside, so what we're waiting for now, and this is the time when there's a lot of maneuvering for positions between March and April when they start to plant the crops, because after that, it depends on how much rain they get, how much sun they get, and that's the bottom line of what we're really watching. So the grains are in a consolidation pattern, and we are waiting to buy them. They trade very well. If you're interested, in trading them on a shorter term basis, you can go to a half-hour chart or an hourly chart and get some beautiful patterns in all of these things: wheat, corn, and beans. I watch those all the time. There's one of the things in my stable that I keep watching closely. The primary, when we're looking at the commodities today, folks, the real ones to watch is that gold market, because it did exactly what we wanted it to. It came down and stopped right at the 61% retracement, and now it's had a pretty good move to the upside. And if you're interested in gold, look to buy the breaks. That XAU chart, which is the gold-silver chart, stopped exactly at the 61% retracement on the weekly chart going back 7 years. The same thing happened with the gold bug index. It stopped exactly at the 61% retracement. So all of these have fulfilled all kinds of objectives, and they started to move in the right direction. So that's telling you that something is really important happening today. There's frankly there's not a whole lot happening in the commodity markets because not many people are watching 61% retracements in gold and other things, but because they're relatively in downtrends in all of these commodities. But all we're saying is that there could be a potential here for turning. Now, whether this is related to the U.S. dollar or not, I don't know, because if the dollar weakens, it means that our prices of products are going to be cheaper, and so if they have more Brazilian reals or whatever, they can buy more soybeans or gold or whatever by using U.S. dollars if the dollar goes down. When the dollar is up, our products are more expensive, so this can mean that we're looking at something that is really sinister for us, because we're not getting as much money for our products as we should. That's not good for our economy. But that believe me, that dollar index, the one that we focused on, when we started the program, that's really important. That head and shoulders pattern that we've had there has been, very, very important, and it's held up, extremely well. And you want to be able to see that it has a spot where it's going to be, if it gets above 83.10 or 83.20, this particular pattern that we're looking at in the dollar index would certainly be wrong. So that's the main thing that we're focusing on now. I wanted to bring up the chart that we were talking about before. That's the long-term chart in the NASDAQ, because it's the that head and shoulders pattern that we're talking about. We're back up to this same level of the shoulder, and we're still in the same time frame of where it should be stopping. Whether it's going to stop there or not, we'll have to wait and see. But the pattern is still there. It has not violated the 786 retracement by any percentage to make any difference or not. It's mainly the Dow Jones, and of course the S&P has made new highs. And what's really funny, folks, when I was watching the the thing about the Pope today on CNBC, I noticed in the right-hand corner they have a scorecard that says how many points to go for the S&P to take out the 2007 high, and I think it was like 6 points to take out that high. Now, that doesn't mean anything, folks. If you go back and think about when the market's going down, do you see a thing on the CNBC or Bloomberg or anything that's telling you that the market is making new lows from 2004, 2007, or whatever? No. It's the psychology. They have a built-in bullish psychology because advertisers are based on, positive expectations and everything, and that's why, it's skewed, and that's why you get the Dow up 10 days in a row is because, they have a little guy with a flute, and he's walking down the street, playing a flute heading towards the ocean, and you've got to be really careful up in here. Maybe this was, I'm bringing back deja vu again, but I remember in '99 and 2000, I warned about this in my writings for several weeks into 2000 about what was really coming, and it was each time it made a new high, it became more ominous in my opinion, and I think it's the same thing that we have going on this time, and if we had some things that look better technically on some of these charts from Asia, I would say yeah. And the reason why I look at Asia because that's they're 30% of the GDP of the world. If they were to to really start to pick up there, then I would say yes. But we're just having a bear market rally in Japan, and we're having a minor rally in the Chinese markets, including the Hang Seng, which stopped exactly at the 786, several weeks ago. So these are the things that that make me wonder. And then the commodity markets. We don't have a we have a copper market that is certainly far worse than anything that we've ever had before. And that's the other thing that bothers me. And there's one other thing, and this is we got to get to this. We got a call from Vince in New Jersey. Are you there, Vince?
I'm here, Larry. How you doing?
I'm fine, sir. What can I do for you today?
Well, I'm going to violate your genre again because you mentioned Qualcomm rather than futures. My son called me a while back, and he read online somewhere that a guy bought, I think it was an Apple phone thing, and the guy opened it up and he said all the chips in there were Qualcomm. So I guess he was hyping Qualcomm. I'm not sure. So when he called me, Qualcomm was $52 a share. So what I used to do in those days is go see what the insider buying was. And I called him back. I said, I don't know what to tell you. I haven't been doing too well myself. I'll just give you information.
Hey, Vince, we've got to take a little break here. Will you stay with us till the break, and then we'll finish this up?
Larry, I'll stay with you till hell.
Okay, Vince, take a break here, folks.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and Vince, I was able to find the chart from the monthly chart going back, and it's been split adjusted, but I posted it into the Tiger TV. It shows that we are at a 61% retracement of that high from December of 1999 in Qualcomm. So that's an interesting number, too. Whether that means a great deal on the long term, I don't know, but I certainly like 61% retracements. Number 2, whether that means a great deal on the long term.
Yeah, well,
retracement.
I'm trying to, I got you in the wrong spot here.
There's a echo coming
I looked up the insider buying. I'm going back a couple of years. It was like 52 or so at the time. And according to the insider buying, the insiders were selling, I guess, 200 or 300% more than they were buying. You know, and
that's been happening a lot in stocks from what but these guys are losing too. I mean, the insiders have been huge sellers recently. And yet, the market, continues to go higher. That means that they don't know any more than I do, which is, so.
I doubt that, Larry. I think you know more than they do.
Yeah.
Oh. Anyway, I'm watching this thing. It was 52 when he asked me, and then I saw it go up. He thinks I'm a genius. I called AutoZone at 21, and he thinks it was a lucky call.
Well, as long as he doesn't know that, Vince, you're a lucky man.
Well, I told him, I said, Anthony, I can't tell you anymore. You know, I have Western Union. I got clouded on Western Union. I believe you probably know better than I that Western Union was about 11, and they were talking $26. And at the time, I was foolish and had margin account with them, and they cleaned me out, went all the way down to $2.
Yeah.
And the last time I looked, it was like last year sometime was $26. So I agree with you. The market overall is not fixed, but some of the big money guys, they play with it.
You know, during the big run up during '99, Donald Trump was in trouble with his Trump casinos, and the stock was trading at 13, and he came on CNBC and said that there was a takeout play at $26 a share, and the stock at 13 didn't even uptick. So nobody believed what Mr. Trump was trying to sell, and of course the stock went to I think it's on the green sheet somewhere, pennies a share, but just because someone comes on and tells you something, it doesn't mean that it's so, and that includes me or anybody else. You got to do the work yourself. It's the one thing I've learned, in all this stuff. The other thing I've learned is that you can be, happy at everything you do, but if you got somebody sick in your family, it's all moot. And I know you've gone through a lot of health stuff yourself, Vince, and I know you appreciate getting back to being better again. So health is more important than anything that we do out there. Anybody that doesn't believe that, you better go back to school.
There was another story I wanted to tell you, and I forgot.
Well, we're going to be at the end of the show here. Why don't you hold it till next week and give us a call, and we'll see what you have to say. Okay?
Well, it's not really important. Just
Well, we always like to hear from you. That's the best thing we have going for us. We got people calling in, telling us what they think.
All right, Larry.
All right, my friend. Talk to you later. Live every day in an attitude of gratitude, and may God bless.